Markets head into Friday with risk sentiment firmly on the defensive as geopolitics continues to overwhelm traditional macro drivers. Escalating tensions in the Middle East remain the dominant theme after President Trump signaled he's moving closer to a decision on a significantly larger military response against Iran, keeping fears of a broader regional conflict elevated. That has translated directly into another sharp rally in energy markets, with Brent crude back above the $100 mark and WTI pushing into the low 90s, reinforcing concerns that renewed energy inflation could complicate the global monetary policy outlook. The move higher in oil has spilled into fixed income, with U.S. Treasury yields rising across the curve as investors reassess inflation risks ahead of next week's Federal Reserve meeting. Stronger than expected U.S. jobless claims data reinforced the picture of a still resilient labor market, while Wall Street Journal reporting has highlighted growing uncertainty around the Fed's policy path, with higher energy prices increasing the risk that policymakers maintain a more hawkish bias than markets had anticipated. The combination of rising yields and safe haven demand has propelled the dollar to fresh multi-week highs against most major currencies. Dollar yen has extended to fresh 4-decade highs as the wide US-Japan rate differential continues to dominate, although intervention risks remain elevated after Japanese officials reiterated their readiness to act against excessive currency volatility. The euro remains under pressure after the ECB left rates unchanged and maintained a cautious data-dependent stance while acknowledging that energy-related inflation risks remain elevated. Sterling continues to struggle following softer UK inflation data earlier in the week, while the Australian dollar has surrendered much of its post-employment gains as the global risk-off backdrop and stronger dollar outweigh support from the RBA's relatively hawkish policy stance. Looking ahead, markets are likely to remain exceptionally headline-driven into the weekend. Any developments surrounding the Middle East conflict will continue to dictate sentiment, while investors also prepare for next week's Federal Reserve decision, where policy guidance and the outlook for inflation is an environment of elevated energy prices could prove just as important as the rate decision itself. That is all for now.